All right, everybody, welcome back for another deep dive. Today we're taking a look at day trading, and you know those YouTube videos
Oh, yeah.
that promise you like thousands of dollars in minutes?
I've seen those.
Yeah, have you seen one recently?
I think I saw one like maybe last week or something like that.
Yeah, so we're going to be looking at one specifically today
Okay.
that claims $4,000 in just 10 minutes.
10 minutes. Wow.
And we're going to be looking at, is this possible?
Yeah.
Is it realistic? And, what are some of the things
Yeah.
that we should be looking at if we're, thinking about doing this?
What are they not telling you in those videos?
Exactly. So this particular video that we're looking at,
Okay.
it features a day trader who claims they made this money
Okay.
trading on the NASDAQ.
All right.
And they're, showing charts. They're showing a trade.
Uh-huh.
And it all kind of revolves around this concept of resistance
Resistance.
in the market.
Okay. Yeah. And so for anybody who's new to trading or maybe hasn't heard that term before. Right.
Can you give us just like a real quick overview of like what resistance is?
Yeah. So resistance is essentially like a price level
Okay.
where a stock or whatever you're trading
Right.
kind of struggles to get above.
Like a ceiling.
Yeah, it's like a ceiling. So it's kind of like it's gone up to this point a couple of times,
Right.
and each time it kind of gets rejected.
It bounces off.
It bounces off and it comes back down.
Mm.
And so traders will look at these resistance levels
Right.
and try to, predict when
Run
a
them.
stock might get rejected again.
Okay.
And then potentially make a trade based on that.
Got it.
So in this video, this YouTuber is saying,
Mm-hmm.
I saw the stock. It was clearly rejecting this level.
Uh-huh.
And that was my signal to buy.
Okay. So they were buying when it was rejecting it.
Well, they're buying when it's going down,
Okay.
and they're expecting it to bounce off that resistance level.
Got it.
But, I mean, is it really that simple? Well, and I think that you touched on a good point, too, is this idea of like, okay, you see this resistance level, you make this trade,
Right.
and they make it sound so simple, right?
Yeah, in and out in 10 minutes, and then
I'm done for the day. It's Friday.
exactly.
Right.
Done for the week. I'm going to the beach.
Right. I mean, I think that,
But is that realistic?
I think we need to look at, is this really like a consistent thing?
Right.
Or is this one very lucky trade
Yeah, exactly.
that they happen to catch on video?
Right.
And I think one of the really important things that this video didn't talk about is risk management.
Yeah, they didn't talk about risk management at all.
At all. Like, what if that trade went against them?
Right.
Did they have a plan in place?
Or what if they went the other way?
Yeah, exactly. Like, how much were they willing to lose?
Right.
And did they have, like, a stop-loss order set to
Yeah.
kind of limit their losses?
Yeah. And they also mentioned something in the video about
Oh, yeah.
using Trader Market Open to make this trade.
Trader Market Open.
What does that mean?
Yeah, so Trader Market Open, it's this really interesting phenomenon that happens
Okay.
right when the market opens. So, the stock market's closed overnight.
Right.
And so you have all these orders that are kind of piling up overnight.
Okay.
You have news that's coming out. People are digesting all this information.
Right.
And then, bam, the market opens and everybody's kind of scrambling to react.
So it can be pretty volatile.
It can be super volatile.
Okay.
Like those first few minutes.
Right.
You can see some really big price swings.
So that's probably why this YouTuber was targeting the market open,
It could be.
to try to capitalize on those big swings.
Right, because, if you can catch a stock moving in the right direction,
Yeah.
you can make a lot of money really quickly.
But it can also go the other way really quickly.
Exactly. It's a double-edged sword.
Yeah.
It's high risk, high reward.
Right.
But again, it goes back to risk management.
Yeah.
You have to have a plan in place
Right.
to protect yourself because those moves can be really sharp.
So it seems like this video,
Yeah.
it's kind of making day trading look really easy.
A little bit too easy.
Yeah, but it sounds like it's a lot more nuanced
Way more nuanced.
than they're letting on.
Absolutely. I mean, we're only seeing like a tiny sliver
Right.
of this person's trading journey.
Right.
We're not seeing...
We're seeing the highlight reel.
Exactly. We're seeing the highlight reel.
Yeah.
We're not seeing all the hard work and the learning
Right.
and the losses that probably went into getting to this point.
Right. And the emotional side of it too.
Oh, the emotional side is huge. I mean, trading can be
Right.
a real roller coaster ride emotionally.
Yeah.
And I think that's something that a lot of these videos don't really touch on.
So what would you say to somebody who's, watched this video, they're excited about day trading,
Yeah.
but they're just getting started?
I would say don't base your financial decisions on YouTube hype.
Yeah.
Right? I mean,
Do your own research.
do your own research, absolutely.
Yeah.
And understand the risks. Like,
Yeah.
really, truly understand the risks involved.
Right.
Because it's not just about learning a few buzzwords like
Yeah.
resistance or,
Right.
whatever else is trendy at the moment.
Right.
It's about developing a robust trading plan,
Right.
managing your emotions, and accepting that losses are part of the game.
Losses are part of the game.
Yeah.
Yeah, it's not all going to be wins.
Definitely not, no.
So be prepared for that.
Be prepared for that.
All right, so the big takeaway here,
Mm-hmm.
if you're thinking about getting into day trading,
Yeah.
don't just watch a couple YouTube videos and jump in.
Right.
Do your research, understand the risks,
Absolutely.
develop a plan,
Yes.
and, be prepared for some losses along the way.
That's right.
All right, that's our deep dive for today. Thanks for joining us,
Thanks for having me.
and we'll see you next time.
See you later.